Good morning. Welcome to day 24 trading in the sim. It's a new month today. We finished off April the other day. Unfortunately, it ended as a red month due to that mistake on last Wednesday that we couldn't end up recovering. And we've been red the past couple of days as well, just small reds. Small red every day can add up. And I'll continue about that in a moment, but let's just check what's going on this morning. S&P 500 continuing to push up and make all-time highs. US oil has been going up, but it peaked and pulling back. We have a couple of stocks above 50% today. We have Q as our leading gainer. Made a nice move after hours, but it's a higher price stock. Not particularly interested in that. ISPC made a move after hours, gap down, and now it's curling back up a little bit here at 7 a.m. I'm not particularly interested because it has to get back up to 734. ISBC is a healthcare provider stock with a recent reverse split. It does have a low float. But it looks like it has descending resistance here, potentially. A little bit risky to trade that. The curl on the Chinese stock did work yesterday, but I thought more about that, and I think it might have been the right decision to jump in on that Chinese stock since we had DCAR make a big move during regular hours the other day. So some traders were excited to jump on DCAR, even though it was lighter volume at the beginning of the move. It was more likely to work because of the FOMO from the previous day. But today, this isn't a Chinese stock. I don't really trade curling patterns during cold markets anymore. Our second leading gainer is XXII, which is a tobacco company. I'm not particularly interested in this either. Other than that, everything else is a bit lower down the list here. So what's the plan? What's the plan for today and the plan for May? So I did quite a bit of thinking the other day about what I want to do, considering this red month and the experiences I've had over the past month or so of streaming, month and a little bit here, taking the strategy as seriously as I can to backtest everything that's been going on. And the result I came to after looking over my metrics is that the place where I have the most edge is breaking news, technical breakouts, like high of day breaks, squeezes, and trading at the open. Everywhere else has kind of just been losing me money. It's been siphoning my profits like crazy during this cold market. So curling patterns, we addressed that. Stop trading those. But the VWAP setups, when we're kind of going sideways after the first move, those have been siphoning money. So the best place for me to focus on is when the stock is actually breaking out. So fresh news comes out and it's got that algorithmic spike for the first time. That first move. But once it goes sideways, then for the most part, unless I see an exceptional setup, then I should avoid trading in no man's land where it's kind of going sideways and it's not really breaking out and continuing higher. But that's for pre-market. And for the opening bell, I'm going to continue trying to trade the opening bell, but I'm not going to force it. There's stocks I like and setups I like. I'll try to trade the open, depending on how my performance was pre-market. I'll be taking a session evaluation of myself and taking some notes about how I feel in the morning when I sit down for pre-market and what my plan is, what my goal is for the day, and what kind of size I'm looking to trade and how aggressive I'm looking to be. And when that carries over, when we get closer to pre-market, then I'll do another evaluation, or sorry, not pre-market, regular hours. I'll do another evaluation and decide whether or not I am, what sizing I should trade at the open, if I should trade the open at all. And we'll kind of do it on a day-to-day basis, based on that evaluation and how I'm feeling for the day. So we're coming up here on ISPC. Still very light volume, 42,000 shares. It is a low float, but it has no news. But like I said today, I'm going back to basics here. So I'm focusing on fresh news, breaking news, technical breakouts, and trading at the open. So I could have traded for the breakthrough VWAP because this is a technical breakout. Already at 675. That does count, even though, it's not trading in no man's land right now, but I'm just not sure about this. At the breakout point, it wouldn't have been up enough on the day. And there's no fresh news. So we're just chilling out. Today is Friday. Past couple of days have been red. We are back to basics here. Let me pop out my chat here. So pretty much I just need to remind myself that most of my edge is, uh, you know, like I said, fresh news, breakouts, and trading at the open. That's where I've made the most money in the past month and a half. And I would be profitable if I was trading just that with my current strategy. So we've eliminated all the noise. I made an attempt with my VWAP setups, and I do still think that they work to a certain extent. But most of them are just trading in no man's land. So the VWAP retests, it is a, it is a setup on Ross lists to retest a VWAP, which is also a bull flag and this and that. But it needs the right circumstances to trade. And the way that I've been trading it hasn't been working well. We don't want to be, we got to take it one step at a time. We don't want to be a jack of all trades. We got to focus on what's working first, and then we can expand into other areas. So VWAP setups, since VWAP is a well-supported area of support and resistance, VWAP setups are basically looking for short squeezes from short sellers. So for example, here we push through VWAP on this stock ISPC. This is what I would call a retest of VWAP right now. So you could consider first candle to make a new high on the entry, or a dip off of VWAP for first candle to make a new high, expecting this, if it doesn't continue lower, and break back through VWAP, to at least come back up to previous wick, the high of the wick here, or break through, depending on how strong the stock is. It's basically a bull flag setup or an ABCD setup. If it comes down, tests VWAP, holds, comes up, and then it forms an ABCD pattern. You could trade it as a bull flag or an ABCD pattern, but it's the expectation that the retest is the expectation that it's not going to continue lower and that we're going to have first candle to make a new high. WTO is popping off here. What's going on with this? 53% Chinese stock. The second setup is a bear trap. I don't really like the chart. The chart it's a garbage stock on this. Breaking out, but it's Chinese with no news, so I don't know how significant this breakout is going to be, because we're only a $2 stock as well. But we have been having kind of a theme with Chinese stocks. I might trade first candle to make a new high here at 290. For the breakthrough 3. So we'll give it a second. Sorry, I'll continue my my VWAP explanations in a moment here. Just want to see if this ends up holding or not. It looks like we're kind of struggling up here. We're not really breaking out too much. We are holding the 9 EMA on the 10-second. So it doesn't look like we're holding. I'll keep an eye on it. So here's another example of the VWAP retest, right? So we have a surge of volume and it pulls back after it breaks through VWAP. You buy first candle to make a new high, expecting the surge up. This is a much better example of the VWAP setup right here for the retest of VWAP. These haven't been working so well recently. It's interesting that I have two examples of it today that it's kind of working. But normally when I've traded these, they've just kind of continued going sideways. You have it on the 2 minute here, same thing. The retest. But that's the first VWAP setup. We have XTLB, which is continuation. We had this daily level at 487. It kind of bounced off of there. So the other VWAP setup I call a bear trap setup. So a bear trap setup is if you take this retest of VWAP setup, except the red candle here closes below VWAP instead of holding above. So because this held, like it dropped below, but it held on the close, then you can expect the move back higher. And the reason why the setup works is because short sellers get squeezed out. They probably short off of VWAP for the breakdown. So they're expecting it to fail and go lower, but when it doesn't fail, it'll surge back higher. But with the bear trap setup, it can cause even more short squeezes because it'll close below. So short sellers have even more conviction that it's going to work. But then price doesn't go lower. It kind of consolidates just below VWAP for 0 to 3 candles, like just a couple of candles before forming an entry candle like a hammer or a dragonfly or something and squeezing back through VWAP and causing short sellers to cover. That's my bear trap setup. And these work best on the front side of a move. Like technically this is, this isn't too far from the front side, so this is where it works kind of best after something pops up, fails, and then it's curling back up, because this is also a curling pattern in a certain sense, these retests and bear traps. The ones that I've seen that have kind of been going sideways are the ones that are on the back side of the move, and they're just kind of, they pop up above VWAP, but then they kind of just go sideways before they drop back down because they don't have the strength to continue higher. This is a Chinese stock with no news, so I don't know why it has strength other than the fact that it's Chinese and we might have a bit of a theme today. In the past few days with these Chinese stocks that have been popping up. And the last view app setup is just a retest or just a test. So it's retest, bear trap, and test. Test is it's just breaking news on the front side before it's ever dropped below VWAP. So it pops up and it's never dropped below VWAP yet, and it tests VWAP. So you can buy for the dip off VWAP, or you can buy for like one of the technical candlestick patterns that you see, like bull flag, ABCD. All it is it's my way of labeling things that occur around volume weighted average price and calling it a setup, because when you see a wick like this on the bottom side for a hammer or a dragonfly, you know that some short sellers are going to short off of it. And when it fails to break, it's going to cause a squeeze to the upside. That's all it is. It's nothing new or groundbreaking. And Ross sometimes talks about these setups as well. He just doesn't label it as like one of his official setups that he likes to trade usually. He trades them occasionally. And they would probably more likely call this a curling pattern than a retest of VWAP or a bear trap or whatever. It's just my way of explaining it. But I haven't been so accurate trading them so far. So, they're a valid setup, and I believe they work. It's just I need a lot more experience to be able to trade them with an edge. Right now, most of my edge is just trading high day squeezes. So this is kind of grinding. Not really pulling away too much. Grinds from 3 to 330. I could have considered getting back in here for first candle to make a new high that broke the previous level of resistance. I'm just not sure. I really don't like Chinese stocks as a theme. No news Chinese stocks as a theme because I have no idea which one's gonna eventually be the one that they're selling shares into. The past couple of days they've worked, but I just know the first time I jump into one is going to be the time that someone in the Hong Kong headquarters is going to press the sell button and is going to tank down $1 a share. You know, they have my location on watch through my Fitbit or whatever other Chinese technology I have in my home. They're watching me. I jump in this right now, it's going to tank. He bought? Don't beat. Yeah, right here would have worked for a pullback. Even right here would have worked for a pullback if I just accept that it's a grindy stock and let it ride kind of up to 340, 350 for first exit indicator, which is this high volume selling up here. At the same time, it's not like it's lucrative, it's just grindy. Like 280 up to 310, 30 cents on a $3 stock. From here up to 340, 40 cents. But you never capture the full moves on these things. It's probably like 15 cents each. 15, 20 cents. I guess it's something. I just want to wait for something that has fresh news because I'm kind of in trader rehab right now too, since I've had that big loss day last week and I kind of haven't been able to make it back because I've been trading sub-quality setups, sub-quality stocks for the past couple days on Wednesday and Thursday, and I had two small red days. What I really need to do is make sure that I don't continue going in the red. Otherwise, it's going to cause a feedback loop of discouragement. So I want to wait for something that meets all my criteria, has fresh news, and looks good. Yeah, and in hindsight, I mean, it does look very clean. I didn't see this first bull flag on the 1 minute here. I was looking at other stuff, and this wasn't up enough at this point. I think it was like only up 15 or 20%. So I wasn't really interested in it. So I didn't see that first surge of volume with the bull flag. I did see this up here, but it was less clear. It wasn't an obvious bull flag or ABCD pattern or anything. So given how the market has been this week, it's probably prudent of me to not trade with real money next week and extend my simulator trading by another week at the very least. I would like things to be a little bit warmer too. I do want to trade with real money for entertainment for you guys, but I gotta treat this like a business. I think that takes priority. I need to finish back testing properly. But I do want to be ready for June. It's 5 minutes to 7:30. I'm just gonna wait for news. da, da, da. I have some. Where is it? I do have uh some of my setups drawn up in paint on my OneNote. Get close some of this stuff. We got 2 minutes here. I'm not trading Q, it's too expensive. But let's see here. Let me add window capture for note. Where is OneNote here? That's a cancel. There it is. So these are my paint drawings of my setups here. So I used to call them moving average pullback strategies, but I mean they're not really moving average pullback strategies. I rename them to VWAP. So VWAP test is when we're closing above VWAP and then we come back, pull back, and form an entry candle before going higher. VWAP retest is kind of the same thing, except it's coming back up from below VWAP. So it closed below and consolidated below, but curled back up, and then it retests it before continuing higher. Forms an entry candle, continues higher, and the 9 EMA is close. Bear trap, kind of similar to a retest VWAP, except it closes below and it squeezes out short sellers. And then moving average pullback was, where it consistently bouncing off of a certain moving average here. Yeah, that's pretty much it. Nothing crazy. They are, and yeah, I put an example of one of the bear traps here. Close below 1 to 2 candles of consolidation, fails to break lower, holding this 20 EMA, and then it squeezes back up through VWAP really quickly. That's that though. It's nothing crazy or innovative and groundbreaking. It's just a different way that I label the setups. My VWAP setups were originally something that I crafted with the intention of filtering out a lot of the garbage setups. I probably should mention that too. The best VWAP setups work when you have an entry candle and with a 5-minute or a 2-minute close. So when the 5-minute or the 2-minute time frames close or close to closing, and it's forming or about to form like a hammer. I can't really draw with that. It's forming a hammer like that, candle right there, or it's forming a dragonfly, which is just a T, or a very small bodied doji, or a regular just green bodied candle with no topping tails. Those are the entry candles I look for in a 5-minute and a 2-minute close and a proper setup, like a bull flag, ABCD, cup and handle around VWAP. So it was a way for me to filter out a lot of the garbage in no man's land, not trade stuff that's suboptimal. But the problem is trading in no man's land in the first place, trading in an area that's kind of been going sideways. So LRHC, it has no news, a very low float. I'm not sure why it's breaking out here. But it is breaking out. Got some sellers popping up there. It has a lot of volume. I'm gonna look to buy the pullback at 250 potentially. I couldn't buy the pullback. I'll just buy first candle to make a new high there, looking for the squeeze up to 3. Just 50 shares. I was 283. I'm not going to add down here. I'm going to wait for it to potentially pop back up to 280. So this might be the first 1-minute pullback here. See, the low of this candle is 258. If it drops below 258, then I'll stop out. So I have to accept that I got in. I failed my entry on the second pullback. I should have gotten in at 255. I got in too high, and we pulled back around 275. So with a $2 stock, I guess you can only reasonably expect it to move like 25 cents or so. From this first pullback, 243 up to, about 260, 267. It failed to break 275. pulled back to 250, broke 275, pulled back to 270. My entry was too high there at 268. I was hoping it would squeeze up to 3, but I would have taken profit if I had taken the pullback at like 255. I thought, I didn't think it would squeeze up so quickly there after forming that shooting star candle on the 10-second. I thought we would have like 1 or 2 more candles to let the 9 EMA come up a little bit more. I thought I had more time. And then I kind of jumped in with FOMO up at 268 for the high of this wick. This setup would have worked. You know, the issue wasn't the setup or the stock selection. It was a poor entry. Even with the poor entry, I could have taken just 10 cents of profit there instead of looking for 3 when I saw it stalling out. Like 279. But I traded very small size on this too. I'm not feeling super energetic today. So I traded with 1/8 size on this stock. On a $2 stock, my quarter size position would be 100 shares, considering that they usually only move 25 cents. And they tend to be a bit grindier. They're similar to penny stocks. So the loss isn't that big because of my mistake there. But when I jumped in this, I should have recognized that the move up here was at that point already done because it is a penny stock, right? Pulled back to 255. If I can only expect 25 cents out of this, then why would I expect it to go up to 3? It just doesn't make any sense. So I wasn't thinking properly when I jumped into this. I think I'm gonna make a coffee while I wait for 8 a.m. news. I need to wake up. So I'll be right back. All right, I'm back. Sorry about that. I just needed to recenter myself and grab a coffee and wake up a little bit. There's really no reason why I should have lost on this trade. I said before it even pulled back that I was looking to buy the pullback at 250, and then I didn't do it. And then I entered the trade too high. So that was a little frustrating. I verbalized it and then I didn't act on it. I hesitated. Such as the struggles of trading. Otherwise, I would have been 25 cents to start the morning or so. We're waiting for 8 a.m. for something good. So BR has been popping up a little bit. And it's cheaper. That's interesting that Ross isn't around today. I guess he hasn't been feeling well or something. So it's just trading today, but he hasn't taken any trades yet. I'm just checking in on what other people are doing today. I'm waiting. Let's see how Candyman's doing. Candyman's green. Candyman got some trades on WTO and SOBR. Pretty good. Looks like DJ is down a little bit this morning. 153 bucks, I think I'm reading. Hard for me to see. I think that's his day realized panel at the bottom there. Something interesting to think about is that this cold market for the past 3 months has been so difficult. I don't doubt that a lot of retail traders got squeezed out of the market in one way or the other. There were probably a lot of traders that came in during the COVID boom, and then traders that came in during after the COVID boom, after it cooled off and they started losing money. That's when they get squeezed out. Here, after the cryptocurrency boom, now we're going to see some traders get squeezed out because of the extended cold market that we've been having for the past 3 months. It's going to be disheartening for a lot of people to trade in this type of market where it's been so difficult. Not much news, not much moving. Winning here, losing there. One step forward, two steps back. And I think my losses in the past few weeks have been getting me a little bit. It's interesting how one big loss can really change your mindset. Because before that big loss, and even if I take that big loss on iMetrics right now, I've done very well considering the market that we've been in. Even though I could count on my hand, maybe on two hands, the amount of opportunities that I've kind of passed by and not taken full advantage of. I'd be a professional trader if I could take advantage of those opportunities like Ross did. And I have to recognize that I've only been trading for 9 months, and there are some people, like some of the prop firms, say that their estimated time for somebody to transition from being a beginner to being an experienced and professional trader, even with all the resources at a prop firm, is about 2 years. And it took Ross like 10 years to, well, longer than 10 years. He said he's been trading for 15 or 20 years now. Been a long time. So to a certain extent, I should be, I shouldn't be too down on myself. I feel like that as long as I keep practicing, keeping my head above water, do just fine. It's difficult when you want results right away, but you kind of have to sit and wait. I'm sure you guys know what I mean too. 3 minutes to 8 a.m. and chill out. Yeah, I agree. It takes a different type of mindset than you're used to in regular everyday life. Normally speaking, a loss is a loss. As Ricky Bobby would say, if you ain't first, you're last. That doesn't apply here. So I have to keep in mind, did I follow my strategy when I took this loss? The answer is yes. Uh, Even though the stock didn't perfectly fit my criteria of stock selection, it was a technical breakout. Just right here. We saw it spiking with increasing volume, 130,000 to 200,000 shares of volume in single 10-second candles. That's a lot of volume for a breakout. It was going parabolic, so I knew that it was going to pull back. That's why I said I wanted to buy for the dip at 250, the pullback. So I followed my criteria for setup selection, and the stock selection, it was within the price range I like to trade. It has a very low float, 40,000 share float. The recent reverse split. The only criteria it didn't meet was that it didn't have news, but it was moving quickly, and I am willing to trade stocks on technical breakout that, like Ross, if it's moving quickly, you can still get some profit on. So it was a good loss in that sort of sense, in that it was I think it was a good trade, like a good trade, but it was a bad entry. So I followed my strategy, but my entry was bad. This could have been profitable if I bought the dip and just sold for 25 cents. Um, but I guess in another sort of sense, I didn't really follow my strategy in terms of what my expectations are for this type of type of stock. Like I said, 25 cents is what I would expect the stock to move on each pullback, which kind of held true in this case. It had first pullback, second pullback, and then it, topped out around 280. So the part of my strategy that I didn't follow was my expectations for the move. Since I jumped in too high, then I should have just sold at 280 just for 10 cents. Instead, I kind of held and hoped that it would go up to 3, if I'm going to be honest. So discipline wise and just thinking about, what my expectations for the move are and planning like my profit loss ratio, I guess that was bad. But the stock selection, setup selection, I think we're fine. We're okay. In fact, I'm gonna note that I said at the beginning of the stream that I would note this stuff on the side here. So I'm gonna take some notes. Oops. LABT. Oops. LABT popping up. Up 42%. Above 4. Kind of a dead cat bounce. But it is holding VWAP and it has some decent volume. I'm gonna buy for the break of 4 here. Take some profit at 450 there. Take some more profit at 450 if I can. It's stalling out there. We got some sellers popping up, so I'm just going to take the rest and wait for a proper pullback. We got a big topping tail. So I recognize that a breakout level on the daily was 4 here, about 404. And that was also corresponding to the 10-second chart here. We have our first pullback, second pullback. I bought on the second pullback for the breakthrough 4. Let's squeeze up to 450. Thanks, Bass. I liked this stock because it was already up. It it was gaining volume quickly, and it was already up almost 50% at this point, and it had a very clear pattern on the 10-second. Even though it didn't have fresh news, it did have after hours news the other day, from the other day. Considering the high volume selling up here with this big topping tail, though, I don't think I'm going to get back in down here unless it can go back up above high of day there. It's interesting. I don't know why my level 2 in the simulator says that the high is 469 when the high on my chart is 466. A bit odd. So I have a $10 cushion now, so theoretically speaking, I could size up with a $10 cushion, but I'm not going to. And the reason being is that still kind of in trade of rehab for one. And two, I want to wait for a stock that I can be a bit more aggressive on that meets all my criteria to size up. So I'm still going to be trading quarter size with half size being my maximum position size right now. At most, I would get in with half size, which is 100 shares. We're curling back up to 450. The price action on the 10-second chart is actually kind of clean. So we might see more out of this. We'll see. This was a very high volume selling candle back here on the 1 minute. So it would need to pop up and break 460 with even higher volume buying. But it's possible. I don't know if it's likely, but it's possible. Now we got another high volume selling candle here. So now the chart is kind of now it's going to drive away a lot of traders. Now it's definitely not so likely that it's going to come back up. Got some sellers popping up at 420. See that 29,000 share seller popping up on MEMX. Trying to keep the stock pushed down. So this right here is all no man's land for me. As in, I'm not even considering trades here right now. But if it were before, then I would have considered this being a bear trap setup right here. From 395, the break of 4, up to this pivot of 420 for 20 cents. This is a kind of a bear trap setup. We dropped below, came back up, closed below, and then we formed an entry candle for the 20-cent move there. That would be an example of one of my bear trap setups at play. And here we have another entry candle for kind of an ABCD pattern. If I were to get in expecting the break of 420, 422. $15 seconds left on that 5-minute candle. So it has the potential to break 420 here. The 9 EMA is kind of creeping up, but it's a little bit heavy. There's a lot of sellers up there. I have the 5-minute candle was 422. The technical breakout spot would be 422. The break of 425 for the move up to 450. MACD is close to crossing over, so we're at a critical point here. This is the beginning of the formation of a potential bear trap setup if it comes back up and breaks back through VWAP right here. Short sellers are going to be shorting off of VWAP for the continued move lower, but if it fails to continue lower here, we form this entry candle and break back through, then we might see a squeeze back up to pivot at the very least, or a break through the pivot, in my opinion. So the high of that 2-minute candle is 407 and the high of this candle is 398. So if it breaks back through 393 and 4, then you might see a short squeeze back up. But if it continues to go lower here, then it just fails. The low of this previous candle, about 377, 376. So if it double bottoming here, so if it comes back up and breaks back through, it might squeeze higher. So we still have some support at 376 there. If it continues to hold, so it breaks down. So now our next level of support is the 9 EMA on the 2-minute. So it's just failing now. Now there's no particular pattern, it's just selling off. We're just waiting for 8:30, which is in 10 minutes. So we're bouncing off of the 9 EMA on the 5-minute at 350 there. By the way, Bass, I took a look at that trader that you mentioned the other day, one that focuses on corrections, trades by Psy. Actually, very interesting watching him and his strategy. Kind of an interesting way to think about corrections. I've never thought about corrections before. Like I've never learned it, so I'm just curious if it can somewhat some of that stuff can apply to small caps too. Higher highs and higher lows and lower highs and higher lows, all that stuff. I can't imagine the account size that you need to buy gold though, considering its price is in the thousands. You'd have to start trading gold with like one share with a $4,000 account size. Kind of crazy. So if you think about it in that terms, I mean, it's technically uptrend, right? Higher high, higher low, higher high, higher low, higher high, higher low. The change in trend was a higher high from right here. So it made a higher high, higher low, higher high. So this would have been the beginning of the change in trend right around here on 368. Sorry, I got too many lines on the screen. Let me get rid of some of these. There we go. That's better. Eight to 10. Started at 8. Do so 8, 10. So right around here. Yeah, so made a higher low, but it failed to make a higher high. So this is downtrend now. Okay. Yeah. Higher low, failed to make a higher high. So now we're on downtrend. Yeah, I see what you mean. That makes sense. Kind of interesting. draw a line at 8 a.m. Why is it that there's no... Oops. There's no 8 a.m. candle. I don't see a candle at 8 a.m. It starts at 8:02 back here. You mean at 8:10? 'Cause 8 a.m. is back here. Like it goes 7:10 and then the first candle after resumption is 8:02. $8:02 is the start. 8:10 was the start of this downtrend here. Oh, back here? Yeah, so higher high, higher low, higher high, higher low, higher high. And then we failed to make a higher high, so now we're on downtrend. The lower high, higher low, so downtrend. Right here was the last high, so now we're back on uptrend since we made a higher high and a higher low and a higher high. Right here, made a higher low and failed to make a higher high, so now we're back on downtrend. Yeah, it does work like that. That's very interesting. Right here, we make a higher high, so we're back on uptrend. Failed to make a higher high. Now we're higher low, back on down. I see. Pretty cool. It's a bit difficult to get used to watching that sort of thing, but have to daily it in. Yeah. That was the thing I was thinking of. He said in his video, don't disregard the higher time frames. Like the 1 hour, he uses the 1 hour and the 4 hour and the daily and 15 minute. So it's like at what time frame, right? I'm only using the 1, 2, and the 5. So like this might work in very, very short terms here to use that, but it's like at what time frame should I be using if I want to apply that theory correctly? Granted, this is just fresh breaking news. I don't even know if looking at a higher time frame for this would be applicable since it's fresh. The 1 minute, 5 minute, sometimes the 15. Yeah, I tried using the 15 before. That's why I have it up here. And it is interesting because the high of the 15 minute is 417 and it's forming a bottoming tail right now with high volume buying, low volume selling. So this 15, besides the fact that the 200 EMA is right here for resistance, this 15 minute is actually showing that if it breaks 422 right now, then we could see, this potentially being a bull flag. First candle to make a new high. we are curling back up here. So we break 422 there, but can pop all the way up to 440 with a topping tail. I see. I wonder why Ross doesn't think about that stuff. I guess he doesn't need to think about that because it's like either it's breaking out or it's not. So in a certain sense, like he doesn't need to monitor reversals and stuff. He just doesn't. It's just not a part of the strategy. JTAI popping up with news at 8:30 here, but it's only up 8%. Do you trade using that sort of theory, like looking for reversals and changes in trend? And do you have success with it? I'm curious. The JTAI getting a bit of volume. We have plenty of room to the 200. The chart, daily chart kind of looks not that great. We have a somewhat recent reverse split and news. But I'm not sure about this one. I'm still watching LABT on a side chart, but I would like to see it come up back to high of day before I start trading it again. Okay. Yeah, it is interesting. I'll um I'll keep an eye on that. If not, just get used to like thinking about corrections too. It doesn't hurt to have another strategy or idea of trading under the tool belt, even if I don't use it. I've tried all sorts of strategies before, and they do help you think about things in a different way and give you some more depth to your trading. So that is interesting. It doesn't look like this one's going to pull away. LABT is creeping up back up to the highs here. So we'll be, if we do break high, then we will be in a window here in a certain way. Next level will be up at 606, 607. And then after that, we have a bit of a gap here. And then all-time highs up at 9. Yeah, it does, I guess, right? Because it's basically just bull flag patterns in a certain sense. Bull flag or ABCD patterns. Since right here, for example, I guess this is technically on uptrend since we didn't make a higher high yet, but we didn't make a lower low either. So right here we make a higher high. So we're back on uptrend as we break through VWAP. We're holding the 20 EMA. MACD's crossing over. I'd probably also work through with my VWAP setups too, in a certain way. Another layer to the VWAP setups. We break back through, make a low, make a high, make a low. But we're not making a higher high here. So if it makes a lower low, then we're back on downtrend. But since we didn't make a higher high here, then we're kind of in limbo right now. Price is deciding where to go, I guess. If it makes a higher high here, then we're still on uptrend. But if it makes a lower low, then we're on downtrend. Unless I think of it in like individual candles. So it didn't make a higher high. Didn't make a higher high, but this was the low. So now this is, yeah, this is downtrend because this is a lower low from right there. Oh yeah. Don't disregard the higher time frames. You're right. So high, low. I guess technically on the 5 minute though, we were still kind of deciding what direction we're going here because the first wick, like the first high is all the way up at 66. So if we come up to, uh, we didn't make a lower low yet, but we also didn't make a higher high. So if it comes up to 66 and it fails, then from that point on, then that kind of determines whether or not the stock is going to fail or not, I guess. If it has the potential to come back on down or come on downtrend, make lower lows or whatever. It's hurting my brain. It's an easy concept. It's a little bit odd to apply when you have to apply like wicks and stuff, and whether or not you take like individual candles into account. Like, does this? Hmm, it's interesting. So we break 450 there. Okay, I see. That would make sense because if, like, I mean, I've seen some stocks where the wick is like $2 in length on the first algorithmic spike. So it'd be difficult to kind of include a $2 wick into your price trend. So that makes sense that the body is more important. I guess don't not discount wicks, but keep in mind that some of the bigger wicks are probably not as important. That's the general area. Okay, yeah. I think I remember I remember seeing Sai kind of doing that where he draws a little bit of a box around the top of the areas of interest of the highs. Right now, I'm a little bit unsure about this stock because of this high volume selling right here on the 1 minute after it popped up. So it looked very good on the 5 minute here with a nice hammer, but it ended up rejecting as it got close to 466. It broke 450 and then kind of rejected. Back here on the 5 minute, we still have a higher volume selling on the first pop through 466. And since then, volume has been decreasing. So this has a bit of a higher chance of a false breakout if it breaks through 466, in my opinion, but we'll see what happens here. But you were right. This wasn't downtrend now. This is just a slight correction for the continued uptrend. On the 5 minute is just uptrend all the way up here. So theoretically speaking, no, not this one. This one. Theoretically speaking, if we don't break down here, let me get rid of this line. If we don't break down here, then this would still be uptrend. Because you have higher, you have a high, we have a low, you have a higher high. You don't count this wick because this is the general area, higher high. And we're kind of pulling back to the previous high right now. You can still pull back down here, but as long as it doesn't make a newer lower low, then we're still okay to be on uptrend. It would certainly give more confidence if you could read charts like that to determine whether they're generally on uptrend or downtrend so that you can trade with the trend rather than try to trade against it. So it does seem like it would be pretty useful just to give you confidence. Like, okay, this is generally uptrend, so if we break a certain level, then you might expect it to continue going higher. I guess the only thing to note is that um, since Ross's strategy is focusing on like scalping micro pullbacks and stuff, even if it is on uptrend, it's not something to rely on, I guess, because you still have to like maintain your stops and stuff and your profit targets. but it gives you a general idea of like which way the stock is going so that you know you have a bit more of an edge when you take that entry. Yeah, I guess in play is the right word. Is it in play or is it not in play? It's 5 minutes to 9 a.m. 4.5 minutes. We do have a nice bull flag on the 5 minute here with a high of 439. MACD is still negative on the 1 minute though. Q is breaking out a little bit. We're right at this daily level of 31. Q is just a bit too expensive for me. So this is continuation from after hours here. But the high was all the way up 35, but it's just a little bit too expensive. $30. It's outside of the price range I normally trade. I'm just going to ignore it. But it is our leading gainer for the day, and it's going to pull some attention away from LABT. Just have to keep that in mind. Three minutes to 8 a.m. Yeah, they are. That's why I recently reduced my maximum allowable risk on anything above $10. So right now, my risk is 2% generally from stocks between $1 to $10, and anything above $10, it's 1%. Because after that last fiasco I had on Wednesday, where I gave back, I had double my max loss. It was on a stock that was $14. And that's been the case for almost all of my big losses in the past, is if it was above $10 and it drops down like $1 or $2 a share and I just had too big of a size, I can still make money on them. It's just you have to trade. I have to trade with lighter volume, and keep in mind that it's riskier. I was around for Ross's second big loss. So when he traded GLTO back in, I think it was October, and he had almost a $200,000 loss in GLTO because he got in at 33 and it just jackknifed all the way down to like 20. That's crazy. So it's 9 a.m. here. So I'm watching news. This is kind of tanking LABT. Not seeing anything pop up. CUE is still going up. I'm just putting it up on the screen to watch it. I'm not even opening level 2 on it. I'm not going to get tempted to jump in it. Much too expensive. So I'm going to leave it, but I'm just going to watch it since LABT isn't really that interesting to watch right now. I'm interested to see what happens when it breaks 35. Kind of have some potential ascending resistance here from a previous daily level. It is building volume though, increasing volume. But it feels a little bit extended up here. You got 9 green candles in a row on the 1 minute. So I would guess that when it reaches 35, it's going to have to pull back. Going to have a proper pullback if it wants to break through. That's my guess, anyways. It's holding pretty well on the 10-second chart here, holding the 20 EMA and the 9 EMA. It doesn't look like we got any news at 9 a.m. I'm gonna check in on Candyman again and DJs, see how they're doing. Candyman's hiding his P&L right now. Can't see it. DJ recovered up to $38, but he's probably break even on the day with commissions or. I still have Trading Farmer on my oops, wrong keyboard. I still have Trading Farmer on my to do for watching, which I'll probably do this weekend. Dip Master. Dip trading is one of the things that I wanna get good at too. Oh, for like a reversal or a mean reversion type of setup. Read on the tape. The LABT is kind of interesting. It's curling on MACD. Um, this is potentially a bear trap setup. So one of my bear trap setups is a close below 1 to 2 candles of consolidation where it fails to break lower before breaking back through VWAP and continuing higher. So we double bottomed here on the 1 minute. And if we apply that kind of theory of corrections, it's technically still not on correction yet because it hasn't made a lower low. So it still has the potential to come back up to the high of 450. The VWAP is 405. Oh, okay. Yeah, I'll try to take a look at him this weekend. Okay. Yeah, I'll try to take a look at him this weekend and see. I'm always interested. So this actually would have worked for a bear trap. I didn't get in for the Breakthrough View app because I'm trying, to trade technical breakouts, breaking news, fresh breaking news, and that kind of thing. I'm trying not to include this as a part of my patterns because even though it worked here, I mean it only worked up to 20 cents. Not that not missing out on too much. I'm trying to limit my trades to where I have the most edge. Is all I mean. So I prefer it to be breaking out above the highs or fresh news or at the open when there's a lot of volatility for the setups at the open, red to green or gap and goes. But this would have worked even if I bought. I mean, technically you could buy down here at the double bottom for the breakthrough four, make 25 cents on this, 20 cents. It's not nothing, but it's not like getting 50 cents on fresh news. Get rid of this line here, just so there's not too many lines in the screen. I should keep at least this level of support though. TREG popping up here, but it has price that is too low for me. I guess it's down on the day too. Yeah, I see that. And that is kind of interesting though, because that kind of corresponds perfectly almost with, buying for this bear trap setup. Since we have a higher low and it's not breaking down further, we have this double bottom here. And I could have maybe with more confidence bought for the breakthrough and then held back up to an exit indicator here. If I bought it for the breakthrough 4 for the breakthrough VWAP, could have sold half at the first pullback and then held for an exit indicator because there wasn't really an exit indicator here yet. Q is still making a lot of noise. So it did a 5-minute bull flag here looking to break through that previous high of 35. We've got 12 minutes to the opening bell. So the only stock that I'd maybe be interested in trading at the open would be LABT. Q is too high price, SOBR is too low price, ESPR is too high of a float. Those are our top four leading gainers. And WTO is Chinese stock with no news. It's only up 20% right now and it's below VWAP. So LABT would be the only stock I would trade at the open here. We have some resistance levels here at 440, 466, then we have a little bit of support here at 413 and 393. That's 8 minutes to the opening bell. 3 minutes to the opening bell. Just chilling, waiting. So considering I only have a $10 cushion on the day, um, I will trade the open, but I'm only going to trade it with quarter size. Still only going to trade with quarter size, and only if I see a really obvious opportunity for a red to green or a break of that 466 level. The potential levels of support I have marked out there on the screen. We have a red to green from 413 VWAP or 393. But what we're looking for is an entry candle. We're not trading the first 2 minutes of the open at the very minimum. We're going to see how it plays out here. There's the opening bell. Let's see what happens. Hands off for 2 minutes at the minimum, while we wait for this volatility to resolve. That's a big spike. There are a lot of sellers above 440. A lot of volume, 1 million shares of buying volume. Now we have an obvious level. So we have 3 topping tails above 466. So if we break 466, it's going to be obvious to a lot of traders. MACD is crossing positive. Or it's about to. Got some sellers popping up there as it's trying to make its way to 450. We're continuing to bounce off of that 200 EMA on the 10-second. Okay, so the high of that 1 minute candle is 423. We're bouncing off of that 393 level of support here. We've got 23 seconds left on the 5 minute and a minute left on that 2 minute candle. If we break back up over VWAP, we might see a red to green. VWAP being 410. I have the 1 minute is 423. But that is a shooting star in the 5 minute with 4 million shares of selling volume. So it is a bit riskier. We break down just for a second, but it gets bought back up above that level of support. Let's see what happens here. That was a big spike. I'm looking at this potentially over 420. 2 minute candle is 423. The problem is that it only has 20 cents to move until the next resistance level. It's 440. If it comes back up. We have 1 minute left on the 5 minute and the 2 minute candle. So we would have multi-time frame alignment if in the next minute we popped back up to about 420 or above VWAP at 410. Let's see, do we bounce off of 390 here again? Or do we break down? This is probably going to be a pivotal moment here. Fifteen seconds left. So we're bouncing off, but we're not coming back up with strength, which isn't a good sign. Okay, so we broke 420, so I'm going to take a starter looking for the squeeze up to 440. Top is 415. I like how it's not pulling away. So we're going to get back out. I think it's a little bit too heavy. We're bouncing off that level again. Hmm. I'll continue watching it, but I have half a mind just to walk away right here. At this point, this is no longer a red to green move or a gap and go strategy, since we're kind of going sideways down here. I thought that the break of 420 here, which was basically all of these levels of resistance after a double bottom, would have seen a bit the price move. Sorry, I thought I would see price move back up to 440 at the very least, but it didn't end up working. We're still holding that 393 level. It's that sort of difficulty again where I just know that at some point, like I'm gonna walk away and then it's gonna break out. It's happened a couple of times already because I don't have enough time to sit around and wait for it all day. So it's still got buying support down there. TLIH has been gapping up, has a recent reverse split just today. 4 million shares of volume. It's a Singapore stock with no news. $9.40, 1 minute red on the tape. Okay, yeah. In a sense, yeah, no, that's not a Ross setup, I guess, but it is a double bottom. It's technically a double bottom, right? But I guess he has a criteria for a 3 candle setup. So off of support there, comes back up, fails to break, comes back down, fails to break, double bottoms, and then you buy for first candle to make a new high at 4. Selling up at resistance. 410 would have probably been the 200 EMA on the 10-second or VWAP. That makes sense. So this is selling off now. So it's pretty much over for this stock. I can see TLIH is halted right now. Resuming at 53.58. It's gapping up. Room up to 7. TLIH had recent reverse split and new after hours news. So when it broke this 350 level, continuing higher. Okay, that makes sense. It's more of that scalping mindset. Buy the dip for the pop back up. Try the dip and rip on TLAH because it's up 73%. This is the second gap up. So dip at 25 for the pop back up to around 450. It's got a decent float, recent reverse split, after hours news. It's gapping up right now. So see what happens here. Yeah, no. Didn't like it. Something about that resumption just felt off. Hard to explain in words. It's like it paused, like there was significant resistance. It felt weird. Glad I didn't take it, but I think that's a sign just to walk away today. I'm surprised this isn't failing. A break of 450, I might see a move higher here, but pretty heavy too. So 10 seconds left on that 1 minute candle. I'm getting dialed in for a potential break. I'm just going to trade very small share size, 25 shares. No, I'm just going to get out. We're going to leave it at that. I had one good trade today, but trading at the open, I guess, isn't working out today. So that puts into question, am I not trading the right stocks in the open? Am I not trading the right setups? I felt like this had a high chance of working because of the hammer on the 5 minute, the high volume buying that was coming in. And the fact that we closed this candle with a hammer for the break above 450 after seeing significant resistance there. So this is a recent reverse split, our third leading gainer, and has after hours news of like earnings reports and stuff. I recognized today that, you know, Going significantly into the red would pretty heavily dishearten me for the weekend, so I just traded 25 shares for the last bit there just to see if it would work or not. But it didn't end up working. It just ended up rejecting with even higher volume selling. So I have to take the weekend to think back on the past couple of weeks. It's been very, very difficult in the past couple of weeks. Both this week and last week are well, this week if I counted Tuesday, which was a $50 green day, but I didn't count it because I was trading at the open just because, then I would be pretty much break even this week. So this week is kind of a scratch week if you think about it like that. But it doesn't feel nice to be red 3 days in a row. I'll say that much. And last week, we fixed that problem trading higher price stocks, but it's not very nice to get back half your account, or not half your account, but half of your book earnings, your profits. So it is a bit disheartening. Next week, I'm not going to be trading with real money. I'm going to keep backtesting the simulator for a bit longer. I can't reasonably say that I'm ready to trade with real money after going red 2 weeks in a row. It's not a reality. So we're going to keep gaining experience in the simulator for another week at least. If next week is good, then I might consider it again. But right now is trader rehab time. So we're going to leave it there. I'm not going to trade anymore. Thanks, Bass. Yeah, I feel like I'm doing a lot better than an average trader who's been trading for only 9 months. You know, some people would say that it's impressive that I can even be break even or even be a little bit profitable only trading for 9 months. Like I've been having a 1.5 profit to loss ratio and like a 55% accuracy on my bad days and a 60 to 65% accuracy in my good days, even in this cold market. If I didn't lose, $100 last week, then I would be net like probably $300 after commissions with a real account. After this week, um, that'd be a little bit lower because even if it was technically a break even week, it'd be eaten up with commissions. I'd probably be red with commissions. So I think I need to not, let myself get down about this week and just come back next week with a fresh mindset. Back to basics, like you said, base hits. A lot of my losses this week were also like trying to, I guess, having too many goals at once. Like I was trying to anticipate the breaks. I was trying to uh, scale in for the bigger moves. And so I messed up a lot of my opportunities this week. Opportunities that could have been green with just regular base hits. but instead turned out to be red or break even because of trying to do too much at once. So perhaps next week it'll be just back to basics. Maybe 2 entries, 2 exits type of thing. Focusing on the stocks with the most edge, the stocks and the setups with the most edge, breaking news, 5-day squeeze, and I'll continue trading at the open for a little bit, but maybe I should only consider it on stocks that are strong, that have made a strong pre-market move. Like this stock technically hasn't proven itself, so maybe I should leave stocks like this alone, even though it looked good. It gapped up twice. It hasn't really proven itself. It's a fresh move at the open. I don't know. But I think that's going to be it for me for now. I'm not going to take any more trades. We're going to leave it at a $6 red day. That's not a big deal. I'm trying to compare my loss days to Ross, and if I were trading with the account size that he has and the share size that he's doing, this would basically be a $600 red day for him, right? $600 red day, he can easily make that back. One really good trade, like if one stock comes out and I take advantage of it, we just need one, and I can take good advantage of it, it would wipe out all of my losses probably from this week and potentially even the last week. We haven't really seen anything like that. The best one that we had was ironically last Wednesday when I did make that big loss when we had that parabolic move on breaking news. But the problem wasn't me. Like it was me to an extent, but it was the scanner that didn't show the breaking news until the move was already over. So I was a bit too cautious. The problem was me because I was too cautious, but you know, part of that was the scanner. But I did see the setup and I got $50 on it and I messed it up. So we're going to fill out, going forward, I'm going to fill out some daily report cards and stuff. We're going to keep positive. But yeah, I've been rambling on for too long now. It's already past 10 a.m., so I'm going to call it here. Thanks, Bass, and thanks to everyone who stopped by and watched today. I'll be back at it again, 7 a.m. Eastern Time, Monday morning. Hot times are coming. Pray for Momo. June we'll see stocks to the moon, hopefully, with the changes to the PDT rule. But until then, take care, stay green, and I'll see you next time. Peace.